Let's take a look now at a risk event, a trading volatility event for the week ahead, for the week starting Monday, the 4th of December. Now, as we know, the Bank of England, the European Central Bank and the Federal Reserve have been keeping interest rates on hold recently. Now, Michelle Bullock, the newly instructed and appointed chair of the Reserve Bank of Australia, on her first meeting out in September, decided to raise interest rates by 25 basis points to 4.35%. Now, there could be some trading volatility in the week coming on Tuesday when the RBA comes through again with its interest rate decision. The big question is will it still be looking at potentially raising rates because it says that inflation hasn't been struck out of the economy. Inflation still remains high, and that is still a problem. Let's take a look at what's been happening with the Australian dollar against the US dollar, because I think this could be where some of the volatility will be. If there's any hint of a continuation of the hawkish attitude that we've seen from the Reserve Bank of Australia, despite the fact that we've got problems with growth, despite the fact we've got problems with consumers finding it difficult with interest rates as high as they are, the central bank wants to make sure that it's combated inflation, which is going to be the longer term problem for the economy. And whilst it's still in a mode to try and get that done, I suspect we could well see some further gains for the Australian dollar against currencies. Now, here we have risen above the 200-day moving average in the last week or so. And as we close out this week ending the 1st of December, looking ahead to the 5th of December with this interest rate decision, if we are to see some more hawkish commentary coming through from the Reserve Bank of Australia, we could well see further upside here, and this will just be a small retracement. Now, we've got the 200-day moving average just below where we are at 65.8 cents. 66.06 is where we're trading at the moment. If you are long on this, your stop would go below the 65.50 level, or around the 65.50 level, with a view to taking this up. Now, where could it go? Where are the next lines of resistance in this? Immediately, we've got this line up here, which is the highs we had back on the 27th of July at 68.21. That's a couple of cents away from where we are. That would be a long travel. We'd have to see some really hawkish comments and a big interest rate rise if we were to get to that sort of level for the Australian dollar. But interim on that, there are some interim highs. We've got another one here at 67.38, potentially would be your price target if you were to be long on this going into that decision on Tuesday. So, Michelle Bullock, what's going to happen with RBA interest rates on Tuesday?